How does a futures contract multiplier actually work for investors? Imagine you're about to buy a big-ticket item, like a house or a car, but instead of paying the full amount upfront, you agree on a price today for delivery later. That's similar to how futures contracts work. Now, the key to understanding how much money is really involved is the futures contract multiplier. It's like a magic number set by the exchange that tells you how much of the underlying asset one futures contract covers. Every futures contract has a standard size, called the contract size or contract unit. For example, one crude oil futures contract usually represents 1,000 barrels of oil. One gold futures contract typically covers 100 troy ounces of gold. The futures contract multiplier takes this contract size and turns it into a number that helps you see the total value of the contract. So, if crude oil is trading at $50 per barrel, and one contract covers 1,000 barrels, then the total value of that contract is $50 times 1,000 barrels, which equals $50,000. This means that one futures contract controls $50,000 worth of crude oil, even if you don't pay all that money upfront. Instead, you only need to put down a margin, which is a smaller amount required by the exchange. Different exchanges might offer different contract sizes for the same asset. For example, there are micro futures contracts that are smaller. A micro crude oil futures contract might cover only 100 barrels, reducing the total value and the margin needed. This allows investors with less capital to participate and manage their risk better. The multiplier also affects how price changes impact your profit or loss. If gold futures move by $1 per ounce and the contract covers 100 ounces, then your profit or loss will be $100 for that price move. That's because the change in contract value equals the futures price change times the multiplier. Knowing the multiplier helps you figure out how much money you are risking or potentially gaining with each contract. It helps you see your total exposure and decide how many contracts to buy or sell based on your capital and risk comfort. It also makes it easier to compare different futures contracts, since the multiplier shows you the size of each contract in dollar terms. In simple words, the futures contract multiplier is what turns the futures price into a dollar amount of the underlying asset. It's a vital piece of information for anyone trading futures because it shows how big or small each contract really is. This helps investors understand their investment size, manage risk, and see how much they could gain or lose from price swings.